Understanding and using walk forward optimization can give you a big advantage when you're running an algo portfolio. Now, what walk forward optimization is it's a type of optimization that simulates a walk forward process of optimizing over a certain period, changing those parameters, and then testing it over a given period, and doing that over and over again, walking it forward. Now, the advantage is for this is it more closely represents how you might perform upkeep and re-optimize your strategies in a given portfolio. So it's a little bit more adaptive rather than what you would see with a typical optimization just over a given time period and selecting those parameters, because you are continuously adapting, and it's much more similar to what you'd see in real life. Now, what I'm looking at here is a walk forward optimization that I ran on TradeStalker, and I ran that over the past 4 years of data. This actually has 5 years of data loaded in, and that is because the first year of data is actually being optimized on before I even begin trading. So this 4-year backtest really is representing backtesting for a year and then upkeeping every 3 months. So I upkeep quarterly, so that's what that 60 days is actually looking at. And as we can see, TradeStalker, 21,000 total net profit over those 4 years, $1,500 drawdown. Really recommend you take a look at walk forward optimization. Futures and Forex trading contain substantial risk of loss, and it's not for every investor. Be sure to talk to an investment advisor before you begin.